analysis.com. Okay. And what we're seeing here, where's the inflow? Okay, the inflows to exchanges. So what's the meeting here? I can't even actually see that too awfully well. Let's see here.
So we've had 30,000, just over 30,000
Oh, there we
Bitcoin
go.
come on chain, onto exchanges in the last day, which is down about 10% from yesterday.
Got it.
Um, Overall, what we're seeing is the amount of Bitcoin that's being held on exchange up 5.6%.
How does that
From
work? I mean, if it's down 10% but up 5.6.
So it just means, so we've had 30,000 Bitcoin was moved onto exchange, but that doesn't necessarily mean that also there's also Bitcoin that's being moved off exchange. But what it's saying is that the inflows are not matching the outflows, and therefore we're seeing an increase in the amount of Bitcoin that's being held on exchange.
Interesting. And what I notice is that it's just, even though the delta on inflows has changed down 10%, it's not outflows. Like, I don't see a negative. Like, wouldn't there be a negative here if if there were any outflows?
So this number would be negative. So right
Yeah.
now, so this number would be down. So right now we're seeing that there's about 306 more Bitcoin being held on exchange right now.
Okay.
And if there was outflows, this would be a negative number.
And so then, I mean, how do traders view this? Like, is this a positive sign that we're getting more liquidity? And that means, like, as long as the median is net positive, even a little bit, it's priming for a bull run? Like, what are they?
No, this would be net inflows would actually be negative for traders. There's
How
actually
so? Why?
Because net inflows of Bitcoin means you don't move Bitcoin onto exchange unless you're trying to sell it.
You don't move Bitcoin onto an exchange unless you're trying to sell it.
And so if you're going to sell if we're seeing a net inflow of Bitcoin onto an exchange or onto exchanges, you're expecting increased selling pressure.
So this is inflow of Bitcoin, not inflow of USD.
Yeah, this is inflow of Bitcoin.
Interesting. George Pate says, "Sup, thugs? What's going on? Can we trace who is moving it by looking at Blockchain Explorer?" Well, we could, and this is where I think AI really desperately needs to come into play, because with AI, it's nearly impossible. With the volume of data, in my opinion, it's nearly impossible for a human to, like, track, well, this address, this address, this address, oh, and then this address is connected to some publicly available information, and we can now kind of
We do have
bridge.
some of that info. There are whale alerts. It's
Whale
a
alerts.
And so that actually tracks. Some of it is related to just big accounts, like big wallets that hold lots of Bitcoin or otherwise. And sometimes um, there's like a specific name that's associated with the account because either you've got their .eth address or otherwise that you can figure out who it is.
Well, and have you seen with these whale alerts or whale trackers, are they building a data profile on these accounts? Because, like, it's kind of like a knowledge graph, like a Facebook's open graph or Facebook's knowledge graph of a persona. You have an address that's, attached to so many other consistent addresses. AI has to see, like, a pattern and go, okay, no, these accounts are with the same people. They're self-dealing. They're trading NFTs to each other and hyping a price. But then we also have this public. Now they're, some NFT god is connected to this one account, and now we can start building, like, a knowledge graph and know that this address is now most likely this person. Like, I mean, there's
So
got to be a
no, I
way.
actually haven't seen anybody do that. Or at least these softwares don't do that. The whale alerts are just about tracking inflows and outflows. Um,
Interesting.
but I do know Ben Cowan has used that a little bit when considering market bottoms, market tops,
Yeah.
by looking at kind of top holders of Bitcoin and ETH and
Hmm.
kind of seeing what their behavior is at different points.
So let me go back to this real quick because I'm trying to get my head around this. You are saying that when you say see BTC inflows to an exchange, that is prepping for a sale. Is
Yeah.
that like the only thing it could be? Like,
There's very few other reasons why Bitcoin would be moved onto an exchange other than for a sale.
really?
Because unless you're trying to move that Bitcoin into wrapped Bitcoin and then moving it onto a different chain, there isn't really other major reasons to be bringing Bitcoin onto an exchange in the first place, unless you're selling it.
So then, and you were saying this before when George Page jumped in and we started looking at this chart. There are services that share USD inflows and outflows. Is that
USD
or
inflows and
UST?
outflows. USDT. They used to do USDT and BUSD minting and burning, so that they would have that. They did have that information. Yeah, you could arbitrage. There could be arbitrage trading, but from what I've seen, that's not incredibly common in terms of if you're seeing Bitcoin accumulate on an exchange. Like if you're seeing it coming from a chain onto uh, onto exchange, you're not moving large volumes for arbitrage trading. Not normally. They're usually relatively small transactions. At least from what we've seen with different exchanges, because liquidity on exchanges aren't very high.
Interesting. So like George Pate, who runs a Bitcoin miner, they might mine for like a month, and then whatever harvested returns they have or mined returns, there in your hypothetical, they move that to an exchange, and that's where it starts to show the inflow. So that's the case you're making, that someone's prepping for sale, whether they mined it or whether they were selling products or services and were paid. There's really no purpose to have inflow in terms of prep for sale or trading. Um, that's really interesting. I really wish there was a good sign of cash inflows, like new money. And you mentioned
So
USDT and BUSD minted, but we're talking the reason I'm looking for is liquidity. And USDT, though it is liquidity, it's being a crypto itself. Like, for example, I'll purchase a ton of USDT to move it from Coinbase to KuCoin quickly and then to trade a bunch of stuff. Go ahead.
so the big thing is it's a minted tether. So
Mm,
you can't mint tether.
correct.
Only exchanges mint tether or
Mm-hmm.
the tether treasury. And so when you see large dollar amounts at good points during the bull market, you were seeing like $86 million of tether being minted at once.
Mm,
Um, then that's good signs of US dollar inflows. Uh,
interesting.
but outside of that, there's not great ways of tracking it, and that is the challenging thing right now. Is we can't really track USD inflows, at least not as accurately as we can track Bitcoin or other altcoin inflows and outflows from exchanges.
Interesting. As a trader, or as a person who has run or runs trading bots, what are the top indicators, like the top 3 to 5 indicators that traders are watching to know if we're in a bull or a bear?
I think a big thing is total traded volume.
Total traded volume. We're talking like the whole market?
Not the whole market. Well, the whole market generally is, you can see it in a whole market, but Bitcoin, ETH, or major alts, generally, if you're in a bull market, you'll see higher, just higher overall traded volume, uh, on a day-to-day basis. So in a bear market, then the amount of Bitcoin and ETH that's traded drops significantly. And so seeing that total traded volume tick up and sustain at higher levels over quite a period is generally indicative of a bull market. Another indication of a bull market, and this is more pattern based, is you won't necessarily see as heavy retracements. So you're
Say
more
that in
likely.
English.
So when the price of a token goes up,
Yeah.
it doesn't necessarily fall back down as hard or as quickly in a bull market.
Gotcha.
So
Gotcha.
like an 80 my co-host on decentralized news, he was asking me, he's like, XRP did 80%. That's like not really impressive considering the ruling of the case. I'm like, in a bull market, that isn't impressive. And in a bull market, you'd expect 300% maybe.
Mm.
But we're in a bear market, so 80%, that's a large move for a major cryptocurrency. But we have seen them pull back.
But
And
not heavy.
not heavy, not heavy heavy. So we're kind of in what I would say is the middling period. It's not really a bull
Yeah.
market, but we're not in the depths of a bear market either.
No, I mean, it pulled back. Like, I forget what it peaked at. I want to say 86, 87 cents, something like that. And it's down about 76, and it's been flatlining around mid 70s. And honestly, this move, this not a big deal, 80%, made it the fourth largest market cap and booted a bunch. I mean, Cardano's way down to number 7 now. It surpassed Binance, of course, and even Solana was on a run, but Solana got pushed down. I mean, it made waves and it made ripples, I guess. Thank you. Um, but you're right. Like the 24-hour total volume traded is down 14%. And so I was looking at this not retracement, but total traded volume and retracement, I guess. So you're looking at those two, and it does feel like a flat market. I'm looking at Bitcoin, and it's up over yesterday in terms of 24-hour volume, like 9%. But I think if Jarrett were here and Jarrett's homesick, not feeling well, under the weather, living in Colombia, man, the guy gets malaria like every other week and or whatever he's dealing with. Not really malaria, folks. It's not a third world country like that. But I think he would say 10% is not big moves for Bitcoin in terms of 24-hour volume. But it is under 30. Like the ripple effect has already faded off of Bitcoin and Ethereum, right? Like Ethereum's down to 18,
Yeah,
1900.
we're seeing massive declines overall in just the total volume and just like the news like this in a bull market would be sustained in an upward movement trend
Mm-hmm.
for at least three days. That's the
Mm,
general consensus is you'll see at least 3 strong days of upward movement.
mm,
We didn't really get 3 days. We got a day of really sustained upward movement before we got hit stagnation. And now we're starting to see the slight pullback even on Bitcoin. We were kind of holding a level just above
mm-hmm.
30,000. And now we've, today and yesterday, we've kind of fallen below that. So,
Interesting. Are you still managing your trading bots?
I had to take a bit of a step back. I'm
Okay.
not taking a major role in it right now.
Are they
But
still performing? Are they still active?
they're still active. Yeah. Some of my coworkers are working on it more, colleagues.
Well, without giving away secret sauce, though, like in a moment where there's like an external circumstance that, I mean, is not a CPI number, it's not anything, it's just a rando ruling. Like, what are the effects to a trading bot when something like XRP just pops?
There, you, there's no way of knowing. Um, there's no way of knowing. Sometimes they'll, if they there's some that are very good at catching swing momentum
Yeah,
and realizing, oh, hey, the chain, if especially, and it works especially well in a bull market where you might get sustained movement.
sure.
The XRP move was like a perfect example of, yes, you could catch that swing movement upwards. Some bots can. I saw some bots do pretty well on both Solana and XRP, and even on Matic, because the upward movement was pretty sustained
Yeah.
for a good few hours. But other coins will, like other bots will either totally miss it because it's like it doesn't make any sense. It keeps thinking it's not going to keep going, or it'll short. It'll start
Mm,
shorting because it's like this upward movement's not
mm.
sustainable. So
So Jared calls for at least a retracement to $25,000 Bitcoin, but be surprised if it hits 20K. Do you agree with the 20K? Do you think it's going below 20K?
I I've seen arguments for 10K, 10 to 15.
Arguments
So
that you ascribe to, like what do you think?
I would say that there are valid arguments for why Bitcoin could go to 15. I don't know. I don't necessarily agree with going to 10, but I could agree with seeing 15 again. So breaking that 20K mark again because of two major reasons. Normally, we have a double bottom. So we normally double bottom in a bear market. We
Can you
haven't.
define double bottom for non-traders? Lay
Uh,
people, come on now, lay people. What do you
lay
got?
people, lay people.
Yeah.
A double bottom basically means you go and the price of a token goes and returns to a certain bottoming price, the lowest price it's hit in a given time frame.
Okay.
And so we haven't done that yet in this bear market.
Now, and
So
how does that work? So I've always wondered this about like traders. At what scale? Because like if we take the chart and move the chart to like different scales, we could see, oh, see, that's that double bottom I was looking for. And then we start zooming out. It's like, well, this bear market's continuing. Maybe I was looking at the wrong scale. So we subjectively move to like a totally new scale. And so how does that work? I mean, when you say we haven't hit a double bottom yet.
you got to look at it on a like, if we're talking about on a bear market cycle,
Okay.
you got to be looking at a weekly or a monthly.
Interesting.
You could call it daily, but most people are looking at a weekly or a monthly. I can pull it up, trading view briefly again, just to kind of show what I'm
Oh, there we
talking
go.
about.
Okay, yeah, let me pull this up. I'm going to hide Jarrett real quick. Jarrett, we'll get to your next comment pretty quickly here, just to bear with us.
So
There we go. Go ahead.
so this, let me use my little drawing tool. This is one bottom. That because we never really exited that zone. That's one bottom.
Okay. And what's the scale of this chart?
This is a weekly.
Over what time period?
So the chart goes all the way back. Like I could go as far back as I want to, but this particular period's looking at like November through December of 2022.
Now, okay, and so what I mean, like as a trader, because and I'm asking this question because I'm sure there's non-traders that watch the show. We often talk about very fluffy stuff sometimes that isn't so technical analysis, but you're here and you're very schooled in this. So like if like you got your little green circle, and just to the upper left of the green circle, there looks like there's two bottoms there. How do we know that wasn't a double bottom?
Upper left. No,
That's upper right. Your upper left is no down a little bit.
Here,
Those two bottoms. How do we know that those?
that's not a double bottom because there's a lower price.
Interesting. So
This,
like it could keep. So I might make a call, but how do I know in the moment that
it's not a double bottom?
Yeah.
If you were trading this on a weekly time frame,
Yep.
you would be looking at somewhere around the price action of 18,000,
Sure.
18,250. And you would, let's say, I'm gonna, on my drawing tool, let me move.
Yeah.
So if you were looking at this on a trading perspective,
Yeah.
you would essentially be seeing, okay, you probably would have bought somewhere around here because it kind of starts exiting the zone right around that point. But you would have a stop loss somewhere around 19,000, and the minute
Mm.
it breaks 19,000, you would basically it would hit your stop loss because you're essentially exiting the bottom of that range, the bottom of that low. You're making a new low, and
Mm.
therefore you haven't officially bottomed. Um,
Interesting. So, real quick, here is Justin Tate. And Justin Tate, for those who don't know, Aussie, you might remember Justin Tate as Maverick from our Discord and other places. This guy is a researcher. I have a great respect for Justin Tate. He says the stochastic RSI to validate or invalidate. So Justin sounds like he might watch for a signal or a flag or a bottom, like you're saying, and then gauge it against something like the RSI, the stochastic RSI. Do you do stuff like that too? Do you compare it against, like, what's your next metrics to try to validate or invalidate your hypothesis?
I do like stochastic RSI. I like it more on a active day trading,
Mm,
lower time frame perspective, especially stochastic RSI. I'm more of a fan of it on a 15-minute chart if I were to be day trading.
mm.
Um, I usually I look at patterns. I look at and then I look for key supports. So by key supports, I mean something like where have we seen previous let me see if I can pull up this indicator. Got
Yeah, folks, forgive us. We'll get back to like mainstream stuff, but I am super curious about this, and I've been meaning to ask Aussie about this. So just bear with me. And obviously, it drew Justin Tate, the TA guy, out of the woodwork. And Jared, I do want to get to your comment here about an 8 to 12,000 last spring because I think that's important to talk to about. What do you got there, Aussie?
so it's called visible profile volume range.
Mm-hmm.
I can't pull it up right now because
That's
I
okay.
a volume profile. But essentially, I look for areas where there's high volume, where you'll see on this particular indicator, there's large amounts of volume that are traded within a specific price range.
Yes.
So it's the opposite of this, where this is just volume on a day. This
Yeah.
is volume at a price,
Oh,
and
interesting.
so
What's the name of that?
um, visible range volume profile.
Interesting. I've never heard of that one, believe it or not. Okay.
And so what I like to use that for is, okay, are we sitting on a visible profile high volume section?
Interesting.
If we're sitting on a high volume section, then we're more likely to bounce from that point, especially if price action above it has lower volume.
So when traders are talking about support, they're not just talking about some imaginary lines. They're talking about volume support. Like, look at all this volume at this range, and this is a pretty strong range where people are buying and selling, but they're firm perceptively that this is the support for what's going to happen next.
Yeah, so this is generally you can see
Oh,
there was a lot of buying and
interesting.
selling at this price range. If there was a lot of buying and selling at this price range, you're more likely to see essentially people defend or
Yeah.
support at that price.
That's brilliant. I really do appreciate you bringing that up. Leave that chart up. We have it off to the side in case we want to come back to that, but I really appreciate we've never really talked about this stuff, you and I. And I know you talk about it like all the time in the Discord groups. I assume you do in some of your other groups. And do you talk about technical analysis on decentralized news at all?
I don't. I kind of just talk about news and economic analysis on decentralized news. I don't
Bro, like you
necessarily
should
drive.
totally you'd have a fan with Justin. I mean, Justin gets into this and you guys should start your own, like, we should start a chat back in the Discord because I it is unique to me, and to me most technical analysis I have thought historically is a lot of BS. But just hearing you explain it like that, it's like, well, no, there's some serious trends there. Real quick, Jarrett, I said it would hit. He did say, and he said this quite frequently, that it would hit between 8 and 12,000 this past spring, but it only hit 16. I would have given it 15,000 myself. But I would have been wrong too. With ETFs seemingly imminent, I really would be surprised if it hit below 20. What are the arguments for sub 15,000 Bitcoin? Do you recall anyone making a sub 15,000
There's
argument?
it has to do with previous cycles. There's volume support bands, and essentially in the double bottoms on certain charts, you essentially see it hit one support band and then you see it hit the other in the next one before taking off. And so 9,600 would essentially be falling in that range for that double bottom. That's the
Interesting.
lower band of that range. And so why I find it a bit more on the pessimistic side. But I'm going to disagree with something Jarrett says in this comment. ETFs seemingly imminent. They aren't seemingly imminent. I'm going to bring up
I've
a
I've got
different.
it. I've got it up right over here. Do you want me to bring up the graphic? One of those
Yeah,
graphics or something else?
it's a graphic that I sent in our group chat before. Yeah,
I'll bring it up. I got you here. Boom, 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 boom,
because
boom.
so this is, I think, a really important chart and list of dates to take into consideration. The first deadline that the SEC has to answer to for any of these ETFs, technically for ARK Invest, they had to respond on uh, June 29th. They didn't respond.
Interesting. They did or did not?
They didn't.
And so you're
They
saying who missed this date? It wasn't ARC. It
it
was
was the SEC. The SEC
okay.
has 4 deadlines to respond
Interesting.
to an application,
Okay.
whether or not they're going to approve. They didn't approve on the first deadline. The next deadline for ARK Invest is for their ETF filing is in August, and then it's in November, and then it's in January. They could wait
Mm.
all the way until January to pass an approval on ARK Invest, but ARK Invest is probably amongst this list the one of the least likely to get an approval.
Why do you think so?
Shortest history. Um,
Kathy Woods. So interesting. And why is that? I mean, do you know that to be a factor?
I assume I'm assuming based on existing behavior from the SEC, they have turned down ARK Invest's
Mm-hmm.
ETF filings previously. I can pull up a whole timeline on rejected ETFs as well, but they've rejected ARK Invest's ETFs previously.
Now,
So
something I want to call out here, which is nuts. I was looking at these dates just now, reviewing them, and I'm thinking, well, it looks like BlackRock went first, ARK went second, and then you look at the year, and you're like, wait a minute, no.
uh,
Van Eck, ARK, and Bitwise have been on deck for 2 years.
yep, Wisdom Tree has been Wisdom Tree and several others have been on. Actually, essentially all of them, other than BlackRock, have actually filed at least once before, usually in 2020 or 2021. They're on this other graphic that I've got. You kind of see there's a couple of filings uh, earlier on
Mm-hmm.
in 2016.
Okay.
One from Grayscale in 2016, and then
Wow.
Van Eck, Invesco, Wisdom Tree, ARK Invest, Grayscale a second time, all kind of filed again as a group around either March and June, or September and October of 2021.
But to Jarrett's point, Jarrett's used the word imminent, and you're countering the word imminent. Um, Jarrett, let's ask Jarrett. Jarrett, what do you mean by imminent? But in crypto years, this is quite some time. Like for those watching, we were just talking off camera, and it's like, what has happened in the last 4 days? And for the first time, we're like, there was not breaking news in crypto in the last 4 days. There was interesting news. There was hype, the normal hype buzz, the white noise of the industry, but there was not that I saw any breaking news. There's project announcements, but nothing huge happened over the weekend, like since our show on Friday. And we were like, dang, okay, like it's quiet out there. But in crypto years, it is a long time until some of these deadlines that we're seeing later in 2023 and then 2024. Now, these deadlines, though, Aussie, are these like different types of tiers of responses, or these are just windows that if I miss the first one, I'll get to the second one. If I miss the second one, I'll get to the third one? Like, what is the
Yeah,
thinking
like
here?
the SEC doesn't necessarily have to respond in the first deadline, like the SEC has until the final deadline,
Okay.
and these are generally um, estimated dates of, hey, this is a quick approval time, medium approval time, late approval time, or no approval, like, or final chance on these different applications. So we're seeing a lot around March 14th, 15th of next year
Mm,
as final deadlines. So
yeah.
I'm more likely to, at least from behavior that we've seen from the SEC up until this point, we're seeing, you know, they'll probably wait till the final deadline, and that would be in early mid March next year.
Well, the one thing I do noticed is if we were to put from grayscale on through to this on a chart, you are seeing an acceleration of timelines. You know, the filing for ARC was in 20 was, June 2021. It posted in January, February, March, April 2023. But then look at the acceleration on the other dates that you have here. And even if it's not until the final deadline for ARC in January 2024 and then March 2024 for, say, iShares and BlackRock, I'm seeing a time compression. And all I can think of as an employer, because I spent a lot of time as an employer, all I can think of is they were staffing up this whole time. And like, we've just got to add staff to handle, the scrutiny that this, requires. And so, in that staffing, I think it's relatively imminent for the age we're in. It's not imminent for crypto. So
Yeah.
I'd agree with you there, but I still think Jared's onto something there because I don't want to overlook. Where's Jared's comment? With the imminence here, he'd be surprised if it hits below 20,000. So are you countering because you don't think it's imminent? You think it could dip below 20?
Yes. So I just don't think
Ah,
that the necessary buying pressure that we're talking about. In his next comment, he kind of says before the pre-halving, so 2024 pre-halving, anything before then,
mm,
and to me, that's not imminent in terms of potential behavior. It's not close enough buying pressure if we think about uh, potential reactions in the market that could lead to a 15,000 or $17,000 Bitcoin. Uh,
mm,
I think that's kind of where I disagree. Is I don't think I if we were to hit 17 or break below this, I'm talking before Christmas of 2023
mm.
that this would be happening, most likely in the early fall, early to late fall, so somewhere maybe between October and November. Uh,
Gotcha. Now, Jarrett's bringing up a document by Block and Coinbase, I assume. Are these documents for each, or did they collaborate on? I don't even know what document we're talking about. Do you have an idea what he's talking about,
I
Jarrett?
don't know.
Please, a link in the LinkedIn or something that you're referring to here, or extrapolation. That would be interesting because because being insiders like they are, and being what I think is the wholesale, like especially Coinbase, the wholesale clearinghouse of crypto, the threshold of crypto for all institutions, I believe, is what they're setting up to be. They have huge insight and they can be very selective in what they reveal, but they probably have bushels of data that could point to a very bullish market, and they just seed it out strategically. I'd like to know what this document is about Fortune 500 companies. I did see an article. Who shared this? I think it was one of you gents in our chat about, was it Disney? So no, was it Walmart? One of these companies was using or allowing crypto. Oh, it was the Google Play
Yes.
Store.
Yeah, that
So
was in
tell
our
me
show
about
today.
this. Like, this is a bullish indicator of sorts. Not bullish. This is Web3 being infused everywhere. So what
Yeah.
was this article about? Tell me a little bit more about this.
So um, Google Play and is now allowing apps that reward customers in digital assets. So this is something that we haven't seen before. Uh, they had previously held a stance just like Apple, not
Hmm.
allowing users to earn crypto assets in apps or in games. So it could be NFTs or tokens, and it's now allowing users to buy, sell, and earn these digital assets in apps in their games.
Mm,
And so this
mm.
is kind of something new that Google is allowing, but it doesn't necessarily mean buying pressure for Bitcoin. It doesn't mean buying pressure for Matic or otherwise. What it could mean is, hey, we might finally get a good Web3 game because
Yes.
you can now release it on mobile devices
Hmm.
and get that interest and that downloadability and clickability that you're looking for as a game designer. And so
Yeah.
that's really the opening. It's not, I wouldn't necessarily say it's bullish for Bitcoin price.
I mean, I would argue, I think it's bullish for the market if the game is good, like gameplay is good, and the interoperability is there. I cannot believe there are not more games that are co-launching and featuring in their cross branding or cross marketing their interoperability. I'm blown away. I would be pumped to see game A and game B both kind of doing their dev at the same time, neck and neck, doing their marketing and pre-launch together. And hey, if you get this in-game reward NFT token, you can use it over here, and they kind of seed what this other game is. But likewise this game is marketing the same thing. And you could turn this racing game off and you win that gun or that car or that outfit or whatever it is, that skin. And then you go into the other game and there's your skin. I
But
don't know
there's
why.
tech that needs to be built, and they are building that tech, but the interoperability tech isn't necessarily all there.
Yeah.
Although Immutable X is working on it, I know there's
Hmm.
other renders working on it. There's
Yeah.
several groups and companies that are working on it. Uh,
Hmm.
we
Hmm.
but Google Play is now allowing them to now give people access to digital assets, but the digital assets that we're likely to start seeing first are going to be either individual game tokens. We're going to be seeing, maybe we see skins or NFT, like as NFTs, or guns as NFTs, or characters or as NFTs. But that doesn't necessarily mean that there's now, that's not bringing people into the rest of the market. It's bullish for Web3 and blockchain tech, absolutely, but
Yeah.
Apple still doesn't allow it.
Yeah.
And that now you're playing a 50-50 game. Are they going to build Web3 for Android and just make it so they can easily pull it out for iOS, or
Mm.
are they going to wait until iOS gets on board so they don't have to double or triple their resources to build Web3 on Android?
Mm. Jarrett jumps in here and says, if Binance goes down, you'll see a sub $10,000 Bitcoin. I think if Binance goes down, you will see pain. I don't know if you'll see a sub $10,000 Bitcoin, though. What's your sense of it, Oz?
I think if we were to talk about a sub $10,000 Bitcoin, I think Binance going down would be one of the key parts of it. I don't know if Binance going down would necessarily be the only thing that would be required to have it happen. I think there's probably a couple different factors. Uh, I would see interest rate hikes. If we see the 2 to 4 more interest rate hikes that Larry Fink talked about, when he was talking about Bitcoin being considered an international asset, if we see that combined with Binance going down, then I could definitely see that being being a good recipe for sub $10,000 Bitcoin. I think we're way too close on too many trigger rates from variable rate mortgages in the US, and we've already seen it hit in a lot of places in Canada. That
Mm.
disposable income and people trying to cover their mortgages on either rental properties or on their own primary residences is going to
Mhm.
go through the roof and might
So how
cause people
confident
to
are you we're going to see a rate hike next week?
100%.
Really? And are you talking a quarter point, a half point?
Quarter point. Quarter point, all for 99% of forecasters agree with that sentiment. We're at 99.8 according to the FedWatch futures on the probability of a quarter basis point hike in July. So I it's almost guaranteed.
Now, I did see a hopeful graphic somewhere. I forget where now. I'm remiss. It might have been Twitter. That there has been steady progress against inflation. And so, but it's interesting to hear the inflection in people's voice as they talk about this. And, inflation's the enemy, but also quit raising rates. And it's like, wait, like, isn't it working against the enemy you had yesterday? And, or is interest rates the enemy we have today? Like, what is it?
So that was a great connection because we just had CPI numbers, which is one of several measures of inflation in Canada. Um,
Sure.
it's actually for the Fed. It's not for the U.S. Federal Reserve. It's not their preferred measure of inflation,
Okay.
but they prefer PCE. But this
What
is
is
the
PC?
data. Uh, oh goodness, I can't remember off the top of my head
Sure.
of what the description is, but it's another measure of inflation.
Okay.
Uh, so we got a read of CPI today in Canada at 2.8% year over year, which is, I mean, much lower than it was 11.8% this time year over year in June last year.
Wow.
So inflation in Canada has always been slightly lower than the US.
Okay.
And interestingly enough, most categories. So this was core CPI. So this excluded food and energy. Um, the main thing that the only thing that was really above 2% inflation was mortgage interest.
Sure. Yeah.
Um, and Canada has taken a slightly less aggressive. I mean, we're still at five. I think we're still at 5% interest rates, but we took a long pause from January through last month. We did a quarter basis point rate hike last month, where we didn't raise rates at all. So we started raising rates earlier, paused for a good number of months, and then raised for the first time in June, in basically for 2023.
Mm.
Uh, and a lot of people are saying, well, look, the main thing that's up is interest rates, but we've got food that's at 11%, and energy is quite high as well.
Mm-hmm. Mm-hmm.
Um, so I see that potentially being maybe a path that we start talking about when we look at the US, because the US is kind of trailing Canada. So we might see one more rate hike, then a
Okay.
pause, and then another rate hike in December. Uh, and that
Interesting.
maybe catches the market off guard um, a little bit. And that maybe breaks the market a bit.
So if you saw these rake heights, it's going to dampen the effect that these ETF news bites are having, and so we're just going to be flat right through the pre-halving and the halving. Is that
I
what you're
th-
thinking?
no, I think we pulled back. We're going to pull back heading into December of this year. I think sometime I thought we were maybe going to see the pullback this summer, but I think the ETF news has kind of delayed that pullback. But it's making the double top even clearer on the weekly chart.
Mm.
And we're really not being able to break the 30,000, 31,000 kind of mark.
Yeah.
for the second time on the weekly time frame. So um, I think that's kind of important. And then I see maybe as we start hearing the Fed talk about pivoting. So they've paused, they've said this is our last rate hike. They're not talking about cutting rates, but they're talking about the possibility of cutting rates
Hmm.
in potentially March of next year, kind of right in Jarrett's timeline. Somewhere around there, we start seeing the market really bounce back, and we really set off that bull market.
Mm-hmm.
Probably sitting, I'm assuming pre-halving will probably sit somewhere around 60,000, maybe 50,
You
50 to
think?
60,000. I think we'll probably bottom. I think it'll be a shorter bottom than what we've seen than the month and a half long one that we saw this last winter, like this last November, December with the SBF FTX situation.
Yeah.
And we probably see it. I'd like to say maybe a 2 to 3 week
Mm.
kind of bottom, a slightly shorter bottom, about half the length, and then we see that more exponential growth that we start seeing starting in January, heading through into March.
Mm. LinkedIn user, sorry your name didn't come through, whoever you are, says, great point. I think Main Street hates inflation but doesn't understand it beyond the impacts of daily prices, while Wall Street and institutions hate inflation because their debt becomes more expensive. I think we'll see let's see what they say over here. Hang on. Two
Max two
max
more rates.
rates hike, exactly what Aussie was calling for. But I guess I wonder how much rate hikes even impact Bitcoin at this point. Well, I think I agree with Aussie, the compound effect. I think, if it were given a loan, if we got good news, for example, I did want to call out, Jarrett shared a link when he made this claim about 50% of Fortune 500 companies. It was from a link from Coin Bureau. You can check out the link in our comments. I brought it up, and Coin Bureau reports about 53% of Fortune 500 companies all have now a Web3 arm. You keep having news like that, and news like the Google Play Store now offering Web3 incentives, basically NFTs and crypto can be earned in game. And then the CPI comes out, or the Fed raises high rates, is not going to really have an effect. But if you get three pieces of bad news, and then the Fed raises rates, everyone's just going to be like, "Fuck it!" Like, let me just dump some bags or whatever. I mean, if you notice, the news on crypto it's really thin right now. And I know builders be building, and I want to know what builders be building. I want more builders on the show. I want to hear more about what Brian Naughton and Victor Munoz are doing with like Bright NFTs. I want to hear about builders and games. I'm hopeful for games, though. What we were talking about with Google Play Store, I'm hopeful for games because I think games lead us in most tech in general. And when we see true functionality, like the promise of interoperability, I know that games, Web3 games, are building this baked in, but you so rarely hear about it. Jarrett says that was me. Jarrett was hollering from another account or somewhere, or there was a glitch in the matrix. Jarrett, that was Jarrett's comment there. But I do wish I saw more for all the bluster and all the money that dumped in previous cycles into Web3 gaming. There are phenomenal games. There are phenomenal games in Web3, even now. But I don't hear about them and their interoperability, which is the promise that I could jump from Fortnite to GA, GA? Grand Theft Auto GTA, Grand Theft Auto, and just move from game to game. What was so funny about that?
I was like, where is he going? Like,
Grand Theft Auto. I could move from game to game and bring my swag, just like I would in Sandbox. But like, what's Sandbox and Decentraland been up to?
I don't know. And I don't necessarily agree that there's been phenomenal Web3 games. There's a few that are starting to look a little bit promising, but gameplay wise, most of what I've seen has been
Derivative.
derivative and like the utter garbage of the utter garbage of mobile gaming.
Well, in
Um,
mobile, yeah, like it's literally just like Candy Crush for games, and it's like I guess that's cool, but and I guess it's Web3 technically. DeFi Kingdoms, I was until their hack, I was pleased with their direction of their gameplay, and they had interesting side quests. You and I and Jarrett saw Valeria Games at NFT NYC, and their graphics and their card packet integration, the IRL integration of the card packs. I mean, this is not a plug for them. This is not a paid thing, but like I still have a ton of the packs right here. Um, it was interesting, but it really was just Pokemon.
yeah, but I would say that is like V1 or V like 5
Sure.
of Web3 game. It was a massive improvement
Yes.
compared to most of Web3 gaming that we'd see.
Yeah.
Do I think it's where Web3 gaming can get to? No, but it is definitely, that was a major step and an encouraging step in the right direction.
I think there's an identity crisis also. So Cardano, believe it or not, has a interesting game that I am intrigued about called Worlds Within. And it started with land plot based, a land NFT sale, and you got whitelisted. You got a game. It was random. It was like a fair mint, and then suddenly you got this very 8-bit kind of property, and then very quickly the metadata kept updating, and your world, which was a planet, was very intriguing. And then they airdropped characters and explorers, they called them. And then they started dropping storylines. And it is intriguing, but there's an identity crisis that this game was kind of cueing me in on. In these open worlds like Decentraland and Sandbox, it's like, wait a minute. Is this an open world like Snoop Dogg, Decentraland, Sandbox party? Or is this gameplay? And are there objectives like a pure game, like forgive me, Diablo? It's just a pure game with pure missions. You got a clear objective, and that adds to the fun. The social component in Web3 gaming is intriguing, and for younger generations, they might move in and out of. No, I'm playing a game. No, I'm talking and chatting to someone and networking and connecting, and it's just like a very fluid experience. But it doesn't seem as fun to me.
No, I mean, open worlds work in some ways or other. I think we need to see some really high quality first person shooters
I agree.
the lines of Fortnite, because that is
Destiny.
probably where you've got the best opportunity
Hmm.
for Web3 gaming and the utility of Web3 gaming in
Yeah.
terms of that interoperability. I would
Hmm.
think the other kind of major interest point would be along an open world like Minecraft,
Hmm.
because that is one of the biggest games out there, and some of that interoperability with potentially like how you can server hop, you can join different servers, and maybe having certain things follow you behind different servers or otherwise.
Hmm.
I think that could be interesting, but yeah, I do think open worlds are interesting, but we need they don't necessarily have the same usability or Web3 tech dependence as other games like mission-based games or first-person shooters that require.
Well, believe it or not, like we often have mentioned and maybe agreed that most of Web3 tech will get absorbed into its relevant industry. I think gaming will be the first place that it disrupts itself. Fortnite could simply roll out a NFT component to what is already in gaming rewards.
Sega has already been talking about has already announced Web3 games.
What is Sega?
I mean, they're one of the oldest gaming companies, like Sonic.
Sega Genesis?
Yeah,
Sega. I've never heard it called Sega. Is that a Canadian thing? You guys called Sega up there?
that's just how I pronounce it. I don't know.
Sega. Like I know the commercials like Sega. That's so fun. Okay, yes. And so when did they announce? I'm
This
not
was a
heard that
few
yet.
months ago, like a couple months ago. They announced that they're indirectly working on a whole bunch of Web3 games, mainly targeting mobile right now, but they're looking at exploring it. And so we're already seeing, and then we've seen the rumors about GTA 6
Yeah, yeah.
having crypto components. So I think that's totally right. But I don't necessarily know if that's not the same thing as the market and everything else.
No, that's true. And like, I mean, there is like, the pillar which we have successfully chosen to not mention yet, and that is Axie Infinity. They seem to always be a reference point for many people. And this was a Web3 game. I foresee a moment where these game studios whose identity is like, we're a Web3 gaming studio, we're a Web3 game, they will have to simply say, we need to drop it and we need to build the world's best game in our category. And we're either a game or we're an open world. And though you can give missions to that open world, like are we World of Warcraft? Like there's the hub, and the hub has a social function in Warcraft. But there are very clear missions. And though games are moving this far, they're going to have to drop. I think they're going to have to drop the identity of we're a Web3 game. And I think that even though there's a lot of hope, and I believe there's a lot of money, and Alex Becker's big on this. This is Alex Becker's thing.
I
Go ahead.
think I see this is where I think the XRP ruling actually takes away the money.
Talk to me. What do you mean?
The biggest decision about gaming about in that XRP ruling was not that the programmatic sales are not securities. It was that institutional sales were. And Web3 gaming and Web3 gaming take a hell of a lot of money.
Yes.
We're talking AAA games can
Oh, you mean
talk.
for like founders and kickoff and startup costs and
Yeah,
stuff?
we're
Got it.
talking 50, like $50 million, $40 million, like to build a AAA game.
Mm-hmm.
And we're talking 3 to 5 years in most cases.
Mm-hmm.
For you can't raise right now, you cannot raise that in Web3. And so you would
Interesting.
need institutional sales to do that, but you can't do institutional sales, at least in the US.
Yep. Yep. Or an NFT whitelist launch, and they're not doing that anymore. They're petrified from some of these rulings about some of that.
That NFT whitelist launch would be the first, like, would technically be safe right now because it's not a program. It's considered a programmatic sale, but you still can't like unless you're a very very established brand. Or you're very very good at marketing. There's not a good chance that you can really do $30 million and have a 5-year timeline
Yeah.
to really raise
Well,
that
and
kind of
people
money.
buying that whitelist aren't going to sit around and wait for 5 years.
No.
I mean, you could call it TradFi an old fuddy duddy, but like nearly every investment, you're holding 3 to 5, sometimes 7 years. And if you're not thinking along those timelines, that's not an investment, that's trading, and trading has a much higher speculation and gambling rate. And there's zero patience among those people. I would be interested in the average raise from whitelisting. I would love the data on what the average whitelist actually raises. And I think it's well below what people think it is. So I would 100% agree with you. You're not going to raise a AAA game on a public offering. Not like that. I mean, and this is why I think more and more of what we call crypto and Web3 will look, sound, act, and in actuality be more and more TradFi. They will move to TradFi because that's where the money is. And people will
Well,
go where the money is.
I think the reason why Web3 will happen in gaming, it's gonna be the companies that have the money that exist that already have
Yeah.
the money to build games.
Yeah.
That's
And they
it's
might
simple
buy
as
up some
that.
of these studios. They might buy up some of these Web3 studios that might be a one-hit wonder or a one-attempt wonder. and they might buy up some of the tech. They might buy up the IP. But I think you're right. I think institutions are coming. I think we need to watch it. And this is what I would like to know: which of the institutions are making the biggest strides? Which of the gaming institutions are making the biggest plays and the biggest strides towards Web3 gaming? Blizzard's probably a great stock to hold. I don't even know where it's at, but I mean, they're publicly traded. And I was looking at them a while back. I didn't move on it. I don't have my numbers up on them, but I would love to see them. I've been holding Nintendo. I mean, when I heard Pokemon Go was coming, I bought Nintendo for like $30. And if you look at Nintendo right now, it's doing all right, and I'm still holding it. I think that the TradFi gaming Roblox is probably at close to a 52-week high, if I'm not mistaken. Unity and Unreal Engine, we missed the boat on that one, son. From a TradFi stock, but I would be interested. There's probably still good stocks, and you're right. I think anyone that I CO'd, they're probably sitting on an empty treasury. They're probably hunting for institutional money. They're probably looking for it.
Yeah, and so to me, I think I love these adoption stories because adoption of Web3 tech does bring a whole bunch of utility for gamers and everybody else.
Yeah.
But when we're talking about where the Bitcoin price is going to be, these ETFs, and the timeline towards the end of the year, these stories aren't what's going to keep Bitcoin at 30K or push it to 50K. And
what stories are?
I think if we see an approval before the end of December,
I was thinking that if we see any hint at an approval, a real hint.
I wouldn't say. I would say we need an approval. A real hint won't do it. We need an approval. An approval will mean something. If we see if Binance defeats the SEC and Coinbase wins against the SEC, then you might get a little bit more action. But I'm not seeing the liquidity and the willingness from this current market to push us much past 40,000 this year.
I agree. I do not see and I was looking at the greed index in TradFi. I reported on it yesterday morning for my show, and it was at 80. This morning, it's at 82. TradFi is getting pretty greedy, pretty aggressive, pretty bullish in general sentiment. But the crypto market, I don't think they're gun shy. I think they're unimpressed. I think there's a lot of disappointment in, guys, show me something. Don't show me tech. Show me UX. Don't show me your next IP. Don't show me your next roadmap. Don't show me your next promise. Show me your next UX of shit I can use today. And I don't see anyone who's got something to show the public that is from a 0 to 1 innovation. And so I think that the retail crypto market, they're like, you know what? Okay, there's not going to be anything cool. I just have to accept that. I might as well buy a BlackRock ETF.
I think there's that, and they are feeling the crunch. When retail has money, retail will buy crypto, but retail doesn't have money. The bull run was fed. This last bull run was fed by money printing and by all of the the checks that the government was giving out during COVID. It was fed
Gambling
on that. And we need it. We need regular retail investors and for institutions to have liquid money that they aren't putting in their 401k. They're not putting in their Roth IRA, that they're not using to service their debt, that they can actually use. Hey, like, I filled my other buckets. Let's go fill my crypto bucket. Let's go fill my Web3 bucket. And that's the last bucket on my list.
I dig it. I dig it. Well, we're at the top of the hour. Any shout outs today? What's going on in your world? Anyone you want to show gratitude or love to?
Ah, I'm gonna shout out a couple of my friends at work. They've been really good. I've been interviewing a lot for some new positions at work, and they've also
Okay.
referred me to a bunch of positions. So a big shout out to my friends at work, Nicole,
Mm.
Karina, and Chantal. So big shout out to them.
Very cool. Shout out to Jared, who's home on the Twitters or on the comments with us today. Shout out to Jared's tweet today that got a stupid amount of hits. It was a reply guy snarky comment to Tesla. Shout out to that for making us laugh a little bit earlier because it started taking off like it was nobody's business.
That was
And
absolutely ridiculous.
absolutely ridiculous. And we didn't get to it, but at some point I do want to talk about this character, Ben McKenzie. Maybe we could prep and read up on him a little bit. For those who don't know, the actor from Gotham, the actor from the OC, apparently he's like a big critic of crypto and has written a book about it, but has been at it for years now. And he's not even come up on my radar. And apparently he's advised the CIA and a lot of people on crypto and scams. And maybe we'll talk about that next week. Guys, check us out this Friday at 10 a.m. We'll be back on then. Submit your questions, notcryptobros.xyz. Thanks so much. We'll see you guys Friday.